Paul, I wanted to begin with what we're seeing in the Treasury market right now, because I think this is really central to equity trade. We've got the 10-year tracking at the highest level since 2007. What do you think it reflects ahead of the Jackson Hole Summit? And in particular, what do you think it means for equities at this point?
Yeah, it is interesting that yields have moved back up again. If you look at the decomposition of the 10-year yield, most of the action has been in the real component, which suggests that there is confidence in the state of the economy. It's not a problem about inflation expectations. It looks as though there has been growing optimism about the economy. That's pushed yields higher. I'm quite surprised that with that rise in yields that equities have done as well as they have, particularly, for example, the tech stocks, which you would normally expect to weaken when yields are rising. So, first of all, for me, it feels as though that optimism about growth may be misplaced. We were hearing there about some concern about consumer spending going into the holiday season, and I would echo that concern. So I suspect that those real yields may come back down again. But in the meantime, I think the stock market is kind of treading water, and I would expect more consolidation here in just reflecting where yields have moved to recently.
Okay, so how do you want to be invested in this market? Because with the 10-year tracking around 4.3%, some are saying, okay, well, this is actually quite a nice, perhaps alternative to equities in this environment, but you're still underweight equities and, as you say, expecting consolidation. So can you unpack that a bit more for me?
Yeah, and I've got to say, with government bond yields rising the way that they have over the last few weeks and months, I think that government bonds are starting to look more attractive. So I think the pendulum is swinging towards government bonds. I was already overweight both investment grade and high yield credit, but I think government bonds are certainly coming back into the picture now. So I think that at the margin that is probably where I am erring, moving towards government debt.